How can I play the Bloomberg simultaneously? Right here. Can I just see a screen capture or something like that? Screen capture. Oh, good. So, I'm going to add screen capture. Color source. Display source. Game capture. How do I add a game capture? Allow transparency. Okay. We'll see how this goes. We'll see how this goes. Let me see if this is working or not. Go back to YouTube.
10:29 a.m. in Hong Kong, 1:29 p.m. in Sydney. I'm Yvonne Mann with First Word Headlines. Wynn Resorts fell heavily again as the sexual harassment claims against its chairman continue to unnerve investors. The company earns most of its money from operations in Macau. We are seeing Wynn Macau shares also down to 5% today, and authorities there have been in contact to check that major shareholders, executives, and key staff meet certain standards. Macau regulators are to review the process for casino license bidding later on this year. JP Morgan has named Daniel Pinto and Gordon Smith as co-presidents, positioning them as the frontrunners to succeed CEO Jamie Dimon. They'll immediately take the president role from Dimon, who says he plans to stay in the top job at the largest U.S. lender for about 5 more years. Last week at Davos, Dimon told Bloomberg that he and the board believe that some of the directors of the company earns most of their money from operations.
It's not working. So why is it not working?
With the bloc. A battle is also shaping up over the terms of the 2-year transition. Brussels insists the UK must continue to abide by EU rules, including the European Court of Justice.
During transition, the UK will continue to take part in the single market, to take part to the custom unions, and to all union policies. It will continue to have all the economic benefits. Therefore, it must also apply all the EU rules. The single market cannot be à la carte.
A Hong Kong-based blockchain investment fund has brought China's first Bitcoin exchange following a regulatory crackdown by Beijing. BTCC was known as BTC China when it was founded in 2011. The company says it will now focus exclusively on the international market and its 3 major products: BTCC Pool, Mobi, and USD Exchange. Terms of the deal have not been disclosed. Global news 24 hours a day, more than 2,700 journalists and analysts in more than 120 countries. I'm Yvonne Mann. This is Bloomberg. Howdy.
Yvonne, thanks so much for that. We wish, as you always say, what goes up must come down. And isn't it a little bit better? I think a lot of market strategists are saying if we see these kind of logical, reasonable mini sell-offs, if you will, or just pullbacks, so that this isn't a market that is going to end in a really ugly and spectacular way. Lots of event risk, of course, this week as well. When you're in a week when the last Fed chair meeting for Janet Yellen is probably on the back burner, right? We're really talking about the State of the Union and the potential for Trump's rhetoric on trade, on commerce, to really set the tone for this next period for the markets.
Yep, indeed, and bond markets to some extent dictating what's going on. How much of this is actually asset allocation? Is it actually people just looking at different places to be putting their money, sector rotation as it were? Some of those late stage companies, some of those laggards doing very well, and including those, we've got these banks in China. They certainly didn't do very well in 2017. Let's have a look at what they've been doing in 2018 thus far, because they're starting to trade, some of them above book value for the first time in 3 years. Boost coming thanks to low credit risks and higher interest rates. China markets reporter Sofia Hotla-Icosta is with me now for the full story. Now, these financial stocks are rising, Sofia. I mean, we've got China Construction Bank up 25% this month, 22% for Bank of China, Bank of Communications 18%. It's quite something here. The stocks are rising everywhere. Is anything China specific here?
So exactly. So financial stocks have been kind of a favorite play everywhere in the world this year. It's all about rising interest rates and the bet that these banks will get their profits boosted by higher rates. And in China, as you mentioned, last year we had the deleveraging concerns. There are some concerns that this would curtail business for banks, but I think investors have started to change their attitude towards this. Deleveraging is a good thing. It removes risks from the financial system. It curtails risks such as loans to non-bank financial institutions and those wealth management products that blew up in the past few years. So it's kind of a play on not only China's better economic growth story, but also reducing risks in the financial system.
Sophia, looking at price to book, what does it mean? What's the significance when it comes to Chinese banks? Because to be honest, often when we're talking about stocks in China, these sort of fundamentals or technicals tend not to apply as much.
Yes, exactly. And this is it's two things at play here. It's a symbolic thing. It means that investors now believe in the asset quality of these banks. Because if it's trading below a ratio of 1, then all these assets, the value of these assets that the banks are reporting in their earnings statements, investors believe they're worth less than banks say. And also specifically for China, that one hurdle, it's an important measuring rate, because it's the point where banks can raise capital. Now, no one's really saying that they're going to start raising capital anytime soon, but it's a measure of confidence in the bank's balance sheets.
Very, very quickly here, Sophia, we look at some of those, China Construction Bank, Bank of China, some of the others there as well. They've got really much better Tier 1 capital ratios now. Return on equity has been really good. They've just been ignored, or is that bad debt problem very quickly just been at the back of everybody's minds?
Yes, exactly. It's been a very difficult part of the market to invest in. As someone said, it's been an uninvestable part of the market in China. With all these bad loans, it's kind of been the shadow banking system in China has been a theme for the past, at least the past 5 years. If these concerns start to wane, it could be at least an investable part of the market, even maybe the most bullish part of the market in China.
Indeed, if people can just look at the balance sheet and go, hey, that makes sense to me, and yes. I believe it. Thank you so much for that, Sophia. Right, when India unveils its annual budget Thursday, there's going to be, well, there likely to be a few surprises, according to the Vice Chairman of the think tank, Niti Aayog. The government might be sticking to its fiscal consolidation plan rather than reining in its ambitions. Rajiv Kumar spoke to our New Delhi Bureau Chief, Uni Krishnan.
It's not a bad idea, but I maintain that the economic survey is not a precursor to the budget. So the budget may still pleasantly surprise you by sticking to the path of the right path for fiscal consolidation. And I think the government has tried very hard to raise revenues and mobilize extra resources, including some more from the Reserve Bank, which is not obliged so far. And knowing the Prime Minister and the Finance Minister and their commitment to fiscal prudence, I think you might well find a nice surprise in the budget. So essentially you're saying that we might see them sticking to the path of fiscal consolidation. Okay. The other aspect is that why you said it's not a bad idea. Why? No, because personally I want to focus much more on the revenue deficit And then on fiscal deficit, I think it's very bad idea to borrow and consume, but it's not at all a bad idea to borrow and improve your productivity and improve your capacities and supply side response. Nobody objects to my borrowing funds for buying a motorcycle, which brings me office much better. So the same thing holds for the country as a whole. And also that the focus should be much more on debt servicing rather than the actual size of the debt. So that you should be managing your debt much better than to simply keep talking about a very crude, in some sense, a very broad, crude concept of what's the debt to GDP ratio. I think it's debt servicing which is important, and it is revenue deficit which is important, and not the size of the fiscal deficit.
But for a country that's that needs a lot of foreign capital, a lot of investors look at how and where the fiscal deficit is, and also a lot of rating agencies look at it, and it sort of creates the mood of setting for how and foreign investors. I don't think so. It's also simply because foreign investment flows finance, I think no more than 3% of our total investment. So it is a typical case of tail wagging the dog. So I don't think that should be allowed. And I think the rating agencies also should look at what they used to do with China 15 years ago, and Chinese fiscal deficits were quite high and their banks are not so well. So they are always looking, they are wise people, they look at the growth prospects. They look at the growth potential rather than just be, fiscal fundamentalist and so on. So I think there is something not right with people continuing to focus only on this one number and not on the other. And I therefore urge you and everybody else to sort of look at what India's growth prospects are.
All right, let's get it over to Delhi, where our bureau chief there, Uni Krishnan, joins us. For more, Uni, what we heard from Rajiv Kumar there really contradicts what another advisor, Arvind Subramanian, has been saying.
Good morning. Yeah, essentially both are advisors, and these are recommendations that we have put forth. What may ultimately emerge is sort of a balance that Finance Minister Jaitley will display when he unveils the budget on February 1st. Essentially balancing demands of the need to control the deficit to a part where it convinces the investors that India is committed to the path of fiscal consolidation, while at the same time realizing that it's an election year and that he needs to loosen the purse strings to ensure there's enough money on the table for the distressed parts of the society, especially the farmers and the poorer sections of the society, who are ultimately the people who would actually go out and cast their ballots for sure on the day of the elections. So it's going to be a tightrope walk for the government, and that's exactly what both the advisors. If you read through the lines, you realize that even what Rajiv Kumar is saying, that government might stick to the fiscal consolidation part, but he wants the spending to be in a manner where even if you borrow more, you need to borrow more to spend on creating assets, and not necessarily in boosting government employees or the salaries, but essentially creating assets where you create more hospitals, more schools, and other capital investment. So in a sense there's a contradiction, but if you read through the lines, more or less the direction is set that it's going to be a tightrope walk where it's going to be a balance between the both.
Can you tell me what major structural reforms are expected in this budget?
Essentially, there might be a couple of steps to increase foreign investment in sectors where there is a cap. Those are the kind of signals we're getting from the finance ministry. But in terms of structural reforms, essentially something that is perceived to be anti-poor would be off the table, because remember, we are going into an election year in 2019. So essentially we'll see sort of an incremental step. I don't think so there's anything radical coming in this budget.
Uni, thank you very much. Uni Krishnan there, our Delhi Bureau Chief, joining us there from the Indian capital. Coming up, Taiwan seeing a window of opportunity opening amid the crypto crackdown. We look at why it could be the next Bitcoin hub. Details coming up. This is The Vote.
This is a hard track, man. This is a hard-ass track. You gotta be kidding me, man. I'm gonna suck at this. I'm gonna suck so bad. Like, literally. Oh my god. Number one blue though, I love it. Ah! That's a good one.
This is Bloomberg Markets Asia. I'm Heidi Lerner in Sydney.
I'm Rashad Slavitt in Hong Kong. Taiwan may be positioning itself to become the next crypto.
This is like one of the hardest tracks.
Crackdowns in China as well as South Korea, but the theft of $500 million from the coin check exchange in Tokyo has raised fresh concerns about fraud. Our Chief North Asia correspondent Stephen Engels with me now with a look at this coin check heist, and how does it affect the moves that Taiwan's been making?
Obviously it will affect, of course, because Taiwan kind of saw Japan as a model of mixing innovation with also, of course, regulation on cryptocurrencies and blockchain and the like, as opposed to China, which was more of a cautionary tale because of the fraud and then the subsequent hard crackdown by authorities on initial coin offerings, on mining and the like. So Taiwan was kind of sitting back and seeing how the different players, including South Korea, are regulating, but also allowing innovation. And that is a role that Taiwan, at least some of the newer people, the younger people in both the legislative yuan and in the regulatory bodies are trying to push.
The 23 Brew Company in Taipei is at the intersection of old versus new, in a micro sort of way, an establishment that is challenging the establishment, or at very least the established way of buying around. You see, patrons here can, if they so desire, pay for their pints with Bitcoin.
Oh my
Lord. Here, so we want to support Bitcoin and help kickstart that in Taiwan. You know, give power back to the people.
In light of the coin check heist in Japan and China and South Korea, Taiwan is still trying to figure out where it stands on cryptocurrencies. Should the government and regulators suppress the market or set it free? Broker MyCoin believes Taiwan's state of statelessness, if you will, works to its advantage.
The sort of awkward position that Taiwan finds itself in this world is not unlike the awkward position that Bitcoin finds itself in the regulatory or in the established banking world. I'd like Taiwan to be known as the ROC, except this time around it's the Republic of Cryptography.
I think we should really take advantage of this wave and really fill the void that's been left in this region.
Chu says within the government,
this is way too hard. I don't want to play this crap anymore. This is way too hard.
The legislative yuan did pass a regulatory sandbox bill late last month to allow fintech.
Well, does this kick me out?
As for initial coin
oh no, this is not a red match. This is so hard. I can't handle that crap.
It seems that government is passive or choose to avoid talking about it.
This is much more fun.
You can really run away from it because you will just go underground and you will have a lot of implications. For me, I think Taiwan can become an ICO trading hub in Asia. You know, what happened on the mainland was too much too soon and evaluated that fundamental tenet of harm. Can Taiwan take it a bit slowly, conservative, in a way safer as well. For now, Taiwan is taking perhaps the more palatable first steps into the crypto world. Once we start seeing Bitcoin sticker more and more places, people will start to get into it and say, oh wow, I can actually use Bitcoin in everyday life. And this is where it starts how to do it on a local level. That's funny, Mr. Fraser there was talking about giving power back to the people. Not really power back to the people. Keep in mind, only that one patron a month right now uses cryptocurrencies and having a tip when it's $10,000 a month.
Hey, how about that? Bum the crap out of them.
The next day it's going to be real big. Only on the basis of the real it's a baby step, and it's about getting the people accustomed to seeing Bitcoin as a alternative. It's not even, how do Taiwan exploit these advantages there? Because it does have, of course, lots of power available there. And I think TSMC, I understand TSMC in 2018 was 1/10 of its revenues coming from people buying semiconductor, all these servers, the power, the mining of this. The mining needs servers, the servers need the chips, and But mining takes a lot of power. Yes, Taiwan makes a lot of processing power, but it had a power shortage on island. In fact, when we were there last week, we were trying to do live hits with you guys here in Hong Kong, and there was a massive power shortage in our neighborhood. So that is endemic in Taiwan right now, especially in the summertime when the big factories making motherboards and chips and the like, they turn on the air conditioners. So right now, that's a backburner issue for the government, mining. Initial coin offering probably higher up on the list, and also just getting wider adoption and a regulatory framework for cryptocurrency. More questions?
Steve, it's a regulatory tightrope, right? Like one of the people that you interviewed in that package saying the problem with China was that they kind of stepped over the do no harm type tenet. So is it quite fragile, the regulatory acceptance side?
Absolutely, because you don't have a real regulatory framework right now. It's fairly friendly because they have this new bill from the Parliament or the Legislative Yuan on December 29th. It's kind of a sandbox, a regulatory sandbox to kind of try innovation and experiment in fintech. But at the same time, you have the FSC, which is the financial regulator, according to the lawmaker Jason Chu in that report, is saying over the last 6 months, there's been more progress in opening up the either eyes and the regulatory framework. But right now, it's been a slow process in getting people on board because of the risk. It's not too long ago. Let's take a look at Dell's sell-off as it gets strange. That's going to happen next. We're going to force last on subsidiary VMware made by the new reverse merger. I'll tell you why.
Dell may finally bring all the pieces of his technology empire under one publicly traded roof. The billionaire reportedly wants to create a structure that would help his two companies, Dell and VMware, better manage a massive debt load. Our business reporter Alex Baruca has been following this story from San Francisco. Last week we reported Michael Dell is considering options for getting his company public, including an initial public offering. Today we have more for you on what those other options might look like. It seems like the billionaire tech mogul is leaning toward a tie-up with his other publicly traded company, VMware, that would get Dell public. How would this look? Well, VMware would use its common stock to acquire Dell, privately held Dell, making the two combined companies into one publicly traded company. This would give them some cash to potentially pay down debt and give Michael Dell the ability to tap into VMware cash flows to also service all of that debt that was put on Dell in taking it private. And in taking EMC into the Dell family a few years back. Another implication of this deal is that you remember back when Dell bought EMC, it also created a public tracking stock that trades on the value of the stink in VMware, but in a sinkhole. So this novel tracking stuff will eventually be subsumed into the combined Dell VMware if he chose to go this route. We'll be keeping a track on how this all shakes out. The board is set to make a decision at the meeting at the end of January, or decide not to do anything going forward. But either way, we'll be there with the news. Alex Burrington, Bloomberg News, San Francisco.
Moving on to the business headlines with JB Holdings efforts to build a certain, I should say, competitive moving into South Coast, it's the investment firm's curated green light unit taking control of Dr. Pepper snapping a deal worth some $18.7 billion. The deal will make it a direct challenge to one of its leading investors, Coca-Cola. It also makes Keurig the third biggest stock drink seller in North America behind only Coke and Pepsi.
Well, McDonald's says it's seeing a rise in customers, a sign that the new one-go menu is paying off. Drivers Venture and Sense 360 say the Golden Arches share of traffic at domestic fast food restaurants hit almost 18% in the week ending January 21st, up 0.4% from a year ago. The positive results show that McDonald's lunch and Frito menus are resonating with people diners.
That's me.
This edition of this part of Bloomberg Markets, building up a bit now, as we continue to bring us down with some of those big stories that we have so far.
It's been invented, of course. I know we've been talking about, of course, the State of the Union by President Trump. This is sort of happening, of course, almost in the backseat, but, it's fairly important.
It's fairly about it. Yeah, but ahead of that,
yes.
A certain person was maybe a State of the Union.
Yes, that's over in Washington, and we have GDP numbers coming out of Europe again later on tonight. But again, this is a very complex sort of issue as well. So we have one of the top economies in India coming on the show later on to talk exactly about this. So what he thinks is, and it's almost a mind-boggling exercise of difficulty here, really, when you look at the Indian benefits. So what Mr. Dr. Charles essentially saying, 3.2%, that's the target for the fiscal deficit. That's a tall order because that's based on assumptions that the economy is growing at 11%.
That's not the way the election being back, 16 months ago. That's that was not really doing things in 20% tax rate.
No, so it's really get the populace sort of move back when you get the budget passed. He also has still, of course, Prime Minister Modi and the Gujarat elections recently, so that's also very much in the mix. And we'll get to this as well. See, I know the fund manager for the specific Bank joining us to talk about this passport. India, by the way, he says, might be a little bit vulnerable to all of this, which we are seeing after that.
It's funny. It's funny. Go! Oh my gosh. Oh no. Oh no! No! Oh my gosh. Come on. Oh my gosh. Bitch. Fuck off. Hey.
It's almost 11 a.m. here in Hong Kong, 2 p.m. If you're watching us at the city, the second trading session off this week of only back home, giving details of different names, David and Jess. Welcome to Bloomberg Market. Have woken as the equity surge grinds to a halt, even so the Asia-Pacific benchmark has seen its third best January on record. Struggling Noble among the day's big losers is avoiding bankruptcy, but at a cost. Existing shareholders will all the and the current highest cryptocurrency is back in the spotlight.
Cryptocurrency is back in the spot.
In a special report on Taiwan. It's not a good day to be an equity investor. Have a look at
it's not.
Across the region. We're looking at one consistent color across asset classes right now. Bond yields are on the way up. Equity market, as you can see, very much in your Southeast Asia, in fact, as a group, seeing the biggest one-day drop going back to August of last year, with money going back into the US dollar as well. And of course, the other side of that equation, I think the Southeast Asian trade.
No way!
Rupiah, peso, ringgit, and also the one. Some spiking money coming out as well. So we'll be just watching out the story for you, whether that is a start or if it should be a healthy correction, given the fact that, as you mentioned, we are still on track for the January 14th market going back to the data going back 30 years. Right?
This is incredible.
Back in 2012. Before that, 19 years.
Oh my god. This is ridiculously disgusting. Oh my god.
Let's get up to the first review.
Thank you.
What the hell is going on today? Uncontrollable speed! Come on, stop bombing me. Jesus.
A deeply regrettable line in this committee where for the first time in the 10 years or so of the economic committee, there was a vote to criticize the declassification process of intelligence and compromise sources and methods.
Verizon is said to have dropped plan to sell Huawei phones in the U.S. after pressure from Washington.
Nice!
AT&T's decision not to introduce the Mate 10 Pro, Verizon will still work on both networks, but direct sales could allow Huawei to reach more customers. It's a significant blow to Huawei's expansion plans.
Man, why did you ban people selling phones? This is disgusting. Oh! What the? I love Huawei. I mean, I don't use Huawei. I have iPhone, but you cannot just ban people from selling phones. That is disgusting. You cannot do that.
Most of its money from operations in Macau, and authorities there have been in contact to check that major shareholders, executives, and key staff meet certain standards. When they heavily overnight on the allegations. And the European Union is warning it will fight back against potential U.S. trade measures abroad. EU policy, and a transatlantic problems could probe more to the
Oh, I was kicked out.
is a contrast with the previous administration, and both sides sought to create a free trade zone worth $100 billion a year for each side.
Trade policy is not about it is not about winners and losers. We here in the European Union believe that trade can and should be regulated. That while trade has to be open and fair, it has also to be rules-based.
Global News 24 hours a day.
Oh shit! Shit! Why did I turn it off? I was stupid. Let me try to use some other outputs to put it on. Where's my phone? Bloomberg. Oh. Taiwan's nice.
We've seen in recent years haven't really been enough to persuade consumers to dip into their pockets and spend. That's still one of the missing pieces for Abenomics. We'll be looking ahead later in the next month and month after that to see what happens with the spring wage talks. That may be a key for Japan this year in terms of getting consumers to spend more if they see their wages rise. And tomorrow we'll be looking ahead, we'll see a little more in a different sector of the economy. We'll have industrial production. We're looking for factory output here in Japan to rise a little bit. That is one of the stronger parts of the economy, which is export driven. But when we look back domestically, what we've got now is weak consumer spending, and that's still a disappointing area for Japan.
Yep, Brett, thank you for wrapping all of that for us. In fact, just to Brett's
I can do it.
By the way, out of just have a look at this chart.
Can we go through that?
454
Can
here.
do
So
it.
yes, we are looking at a tighter labor market, but man, oh man.
Get a nice little swell. Perfect. Oh my God.
Fast. Wage growth indicator. That's the bottom panel right there. We did see some promising signs.
Oh, I'm gonna make it. I swear I'm gonna make it.
Levels, of course, despite the fact that
I'm gonna make it. Woo! Made it.
Right. So that's one thing to consider, of course, when you do look ahead to Japan. Something that remains sticky for the Bank of Japan. Now, for a deeper dive and back to the here and now. What's driving markets across the region? We're joined here on set, Chris Anstey, normally out of Tokyo. He's here with us on set. These are Asia Cross Assets Managing Editor. So, Chris, you know, I look at these declines and I'm almost tempted to say, man, this is the start of the big correction everyone's waiting for. But it has been, of course, a very good January for everyone else.
I can do it. I can.
Well,
This is very difficult. I've never played that. I think I played that.
I'm not sure I'm as quite as tempted as you are to call the end of the bull run. I mean, I think what we're seeing here is that the
oh my gosh,
are basically testing equities.
How stupid am I?
If you see the risk-free asset rate of return, it's going to make you a little less, willing to take on risk and go.
Oh my gosh,
some
missed
pullback.
it.
But if you look at the MSCI Asia Pacific today, we're not as down as the S&P 500 was overnight, and the Apple news from the Nikkei warning about some of the Apple sales forecasts. It has an impact, but we're not seeing dramatic declines here. I think what we're really waiting to see is what are we going to hear from President Trump tomorrow on the State of the Union? Of a ramp up in trade tensions with China that would reverberate across this region, and to what extent will the dollar continue to fail to respond to the higher U.S. yields? It's really been striking that we've seen these U.S. Treasury yields pick up, but it hasn't really helped the dollar. So the old nightmare scenario for emerging markets is you get Federal Reserve lifting interest rates, U.S. Treasury yields go up, the dollar strengthens.
Yeah, money getting sucked out.
Exactly. All the capital flight out of emerging markets. And that pattern is not what we're seeing here.
In fact, it's the opposite of what we're seeing. We're seeing massive inflows into these EM ETFs.
Exactly.
It does bring to mind all of the event risk. I mean, you mentioned the State of the Union. We had the Fed obviously coming through. Goldman was out with a note, I think this time yesterday, that it's, we should have treated the Fed meeting as a non-event. They might come up with something that might be disruptive to markets. Now, tell me this, though. So yields are on the way up. We're at 2.7%, I believe, on the 10-year right now. Not that that's the risk-free rate, but it's obviously reflective of rates going up and us needing to rethink whether valuations need to stay at these levels. How is Asia positioned for higher yields, and should I treat each country differently?
Well, obviously, there are some differences with countries. Pakistan is the subject of speculation on a potential bailout program from the IMF.
What kind of card do they have?
If you look at Asian growth rates,
I haven't played this map for like at least
how Asia over the past couple of decades has built these domestic financial markets. They've sold bonds and stocks in their own currency rather than U.S. dollars. They're pretty well positioned at this point. Again, perhaps the biggest wild card is trade policy. An outright trade war between the U.S. and China probably,
it's like driving my city.
Not only trade flows, currencies, capital flows, all kinds of things that would be hard to predict exactly how it would pan out. But you look at Asian flexible exchange rate systems that have been put in place for a couple of decades. You look at underlying growth rates in some countries, demographics even. Look at the Philippines, which has a large labor force. You look at Vietnam, which is trending 6% plus growth. It's hard to see these guys in the next couple of years coming cap in hand to the IMF.
Yeah, good demographics almost masks all things not ideal. Let's put it that way. Chris, thank you so much. Chris, thank you. Gustavo out of Tokyo joining us live here on set here in Hong Kong. Now, we'll continue the conversation with the markets just ahead here. We'll be joined in a few minutes by Rebecca's agency, Arno Van Wine. He'll be joining us here on set in a few moments with his outlook and where the long-term risks and opportunities are. And later on, we'll be live out of India with one of the top-ranked economists on that country, Axis Bank chief economist, Suganta Bhattacharya, with a preview for this fairly complex exercise of the mind, the Indian budget. That's next. This is Bloomberg.
Christ. Everybody's so selfish, they don't use the secret attack. Selfish. Oh my gosh, I almost got squished. Ah, it's a poop. Oh! Squished by the ball. That was pretty funny. Oh!
I'm David Ingles. Now let's have a look at what's happening across markets, the opportunities that perhaps this dip presents. We're joined here on set by our first guest this hour, Rebecca Asia, Chief Investment Officer and Fund Manager. Arno Van Wine. He manages over around $9 billion of Asian equities. Welcome, and I haven't seen you in a bit. Now, I just want to read this top line of yours to our viewers because it does say a lot about this melt up in equity. So what you're saying is this bull market is the delayed impact of long years of global money printing. Now, the immediate question that came to my mind is how long before the effect of that money printing sort of stabilizes we're starting to see that starting to get right up.
That's why I mentioned it. You're seeing the bull market continue actually accelerating, but at the same time you see all the money growth numbers actually coming down. So that puts you in an environment where I'd say it's a bit late in the game. For Asia, things are a bit different because we also started later in the game. So you may have still more to go, particularly because the valuations here are not very strong.
Are we talking
this is more a global environment where you're...
So 2 more quarters, safe to say, would you say?
Well, yeah, I'm still fairly bullish on markets in general here in Asia because I don't see a lot of froth except for a few markets, and we can talk about that. But generally, actually, there is still good upside. And what's crucial, I think, for Asia is that after a number of years with little earnings growth, we've seen fantastic earnings growth in 2017, and now again we expect 2018 to be a decent year for earnings growth. Last year, of course, you also saw throughout the year that expectations were revised upwards. We'll have to see if that will happen in 2018 as well. But generally, the environment for better earnings growth is healthier because the China economy is healthier.
Yeah, I'm a bit surprised because you look at this current earnings upgrade cycle that we're in at the moment. It's quite surprising that not a lot of people saw this coming, just the amount of upgrades to the system for the reporting season. Is this I guess, a function of, the growth that started to show up about 2 quarters ago?
Yeah, so you're seeing more and more cyclical growth now starting to pick up, and that came quite unexpected, right? The whole rally in commodity prices was like, well, where did that come from? Well, it comes mostly from the China economy getting better, Japanese economy getting better. So the 2 largest economies in the region are doing better, therefore there is more demand for cyclicals. And so far last year, and that's also a major point for me, the growth stocks have done fantastically well, because this was in an environment where people thought, okay, growth in Asia is not as good as it was before, it's not really bad, but we focus on the companies that can still generate growth even though the overall environment may not be too healthy. Now you see more of a broadening of the market, which I think is very good, in which, not just growth stocks perform, not just the tech stocks that we saw last year driving the markets, but you also see the energy sector, the industrial sector doing well. The only sector that's really still under pressure is the telecom utilities, traditionally more interest rate sensitive. So that again goes back to the first point, and then the main headline today, US yields are breaking to new highs. What does that tell you about the future?
What do I do with that information? Because for the most part of the last 6 months, an equity investor would have been able to simply ignore rising yields in the US. Recently, though, you look at Europe, for example, the 5-year in Germany is back at 0. Is that something I can also ignore, or should I start adjusting my equity portfolio?
But is it that we start talking about, 5 years at 0? At least after so adopted to thinking negative interest rates are actually very normal.
Does it matter now?
It matters because, negative interest rates are not normal. And you saw also what came out of the ECB, right? That my Dutch fellow countryman, Klaas Knot, said, actually, this quantitative easing, we should stop it.
He riled markets, didn't he?
Well, and rightfully so. That's how most people feel, that we've been soothed into thinking, okay, interest rates are going to stay low forever. And that environment, I think, is unlikely to stay. No matter what you expect from growth, you will see a little bit of inflation, and you won't see interest rates stay that low forever, which means that naturally there is a shift from what are the long duration stocks, so the growth stocks, right, which have cash flows far out into the future, being discounted back to today at very low discount rates, moving back into more short duration stocks, which are more the value stocks that we like to invest in,
so
where the interest rates doesn't have much of an impact.
So is there still a place to be in growth stocks now, or is value sort of the broader theme you're playing now?
But there should be a catch-up rally in value stocks because their underperformance was as dramatic as it's ever been, more like 1999 basically. And therefore, I think that value rally will have some legs here.
Where does the money coming out of the bond markets, does it go into equities? Because if we do enter a bear market there, should I be worried as an equity investor, or should I be excited?
Generally you will see some moving out of bonds into equity, but of course the truth also is that if bond rates rise, then equities also have a hard time rising further. So that's the big caveat here. My expectation is that interest rates, yes, they will go up further, but inflation is relatively muted, so yes, it will rise, but not too badly, and then markets can actually continue to do quite well. So that's still my base case, but I'm saying to people, well, be careful, look at what inflation is doing, and so far it looks all to be quite muted. And also the interest rates are going to stay low forever. As soon as people think, oh, well, they may not go too low, you may see indeed a massive shift in the market, and then things will spiral up very quickly, and that might cause a problem for the equity market too.
Yeah, well, we haven't had to worry about it for over 10 years, and I mean, the feeling is not a lot of people are positioned, of course, for higher inflation ahead. Arno, we got to leave it there for now. Arno and Ryan there, Rebecca, Asia Pacific CIO and Fund Manager, joining us here really with some solid thoughts that inflation, look at that, the early signs of that. Now, if you are a Bloomberg Star, one of our clients, of course, is catch with all the interviews you may have missed. If you just missed that chat, of course, that we just had there, just tune into our TV Go function. You can also join the conversation by sending us instant messages during our shows to our team, for our guests. We have a conversation coming up on the Indian budget. So if you have any questions on that, send them in. TV Go for you. Now, coming up on the program, we're also talking about Wanda, Magic Wanda. That's a good one. How Tencent sees potential in old school retail. That comes up in a few minutes. This is Bloomberg. This is Bloomberg Markets Asia. I'm David Inglis. Let's get you an update of your latest business flash headlines now. And start things off with Noble finally reaching this restructuring deal on $3.5 billion of the company's debt. Now, the Accord saves it from bankruptcy, but at the cost of wiping out current shareholders and handing control to the company's creditors. Now, after 3 years of massive losses, write-downs, accounting criticism, the company reached an in-principle agreement to convert half of its debt into new equity. Shares of Fortescue Metals, have a look at how they're doing right now. Positive. Yep, there we go. In Sydney, that's on optimism that a change in policy in China will help its key product. The miner has seen Beijing favor its rivals with high-quality iron ore, but there's speculation that trend will change. Shipments from the company fell 4% last quarter as China clamped down on steel capacity. Mills were urged to use better quality materials to cut down on air pollution. In resources, your ExxonMobil is ready to invest $50 billion in the next 5 years, bringing its spending back to levels before the bout in oil prices. Now, with prices around $65. In New York, CEO Darren Woods disclosed a program that includes the Permian Basin of West Texas and New Mexico, the focus of U.S. shale drilling, where Exxon has been aggressively expanding for years. Woods says the Republican tax cuts have fueled that plan. Right, speaking of transactions, let's have a look at Tencent now, because the company is making a new push into bricks and mortar retail. It's leading its acquisition of parts of the commercial property unit of Wanda as the conglomerate continues to divest of some of its assets. So to bring in Tom McKenzie, George is live out of Beijing with a story for us. Tom, the question I have is, why now for Tencent?
fits into this strategy that they've been drawing out, which is to combine their online business acumen and prowess with offline retail. And back last year, they bought a 5% stake in a supermarket chain. The likes of JD.com and Alibaba are pushing pretty aggressively out into this space as well. In fact, Alibaba has its Hema chain of stores. JD.com has got 7 Fresh, which is rolling out in cities like Beijing. So Tencent wants to get involved as well. Clearly timing is pretty opportune because Wonder is having to divest some of its assets. And as you said, Tencent was taking the lead on this. This was a 14% stake of Wonder's commercial property unit, which was worth about $5.4 billion. It's not just Tencent, it's also JD.com, Sunac and Suning, which is backed by Alibaba. But this is a key theme now going forward for the next 12 months at least, is these big tech companies here in China getting involved in bricks and mortar retail.
Now, the other side of the equation, of the deal rather, Wang Jianlin, where does this leave him now and his big dreams for his conglomerate?
Well, his big dream has been severely curtailed. This is Wang Jianlin. You'll know, of course, he was feted as one of the leading business leaders here in China for many years and was once, obviously, China's richest man as well. But his ambitions have been curtailed, to say the least. And that's, of course, because the policymakers here, the authorities here in Beijing, have really put the big conglomerates, the big acquisitive conglomerates, under the cosh, the likes of Wonder, but also H&A, Fosun, and Angbang as well, because of course they're worried that a lot of the acquisitions made overseas were using risky debt. So they've encouraged them to sell off their assets and pay back some of their debt, essentially, and Wonder's been part of that. Last year, of course, they sold almost $9 billion worth of their property portfolio here, as well as some of their theme parks. And then just this year alone, they've sold some of their properties in London, the Nine Elms development there, but also just in the last 24 hours, 2 property projects in Australia worth about $250 million US. So most people that we speak to here say that they expect to continue to see the likes of Wonder and the other big conglomerates divesting their overseas assets. This is part of it. This is another key theme. You've got this retail space theme, these tech companies getting involved in big data and mobile payments in terms of online, offline retail, but also you've got these big conglomerates having to divest some of their assets.
All right, Tom McKenzie, live for us out of Beijing, really wrapping that great story for us. There are 2 themes, as you mentioned, all the way into one. Let's just have a quick glance at markets on the Chinese mainland. That is, of course, as we head into the lunch break for those markets there. I can tell you right now, it's not that good. There we go. We're looking at declines for the major benchmarks, and look at the very bottom, of course, as well. The pullback that we're seeing across the small caps, but compared to what we're seeing in Southeast Asia, it's almost like the bulls are running amok in Shanghai. More next.
Oh, shit. Oh,
futures is signaling, of course, some declines. We're not really doing anything as far as the currency is concerned. In fact, at the moment, we're looking at a little bit, maybe, further preference there for the Indian currency on the back of just this move back broadly into the US dollar. Have a look at what else we're seeing across the region here. Hong Kong, of course, where we kind of need a little bit of the Indian heat, if I should say. Mercury's massively down. The vol index is also pulling back a little bit from the big spike that we saw yesterday. The market's still very much under pressure as well as we head into the earnings season. Handloom properties very much also in focus today. It comes out with earnings at some point over the next few hours. So Hang Seng Index, as you can see, down about 0.8%. A little hint of some smog there, I should also mention. Have a look at what we're seeing over in Tokyo. I'd actually be surprised if we see some smog there. Not really. There we go. Beautiful winter day in the Japanese capital as the cash markets get back into the afternoon session. Topics index 0.7%. So we basically had a look across a lot of these markets. Southeast Asia is really taking the brunt of the selling at the moment. Like the Philippines down 2.3%, and Indonesia also seeing a lot of pressure. So we'll be fleshing out the market story in just a few minutes. In the meantime, let's get you an update of your first word headlines. And here's a moment.
Dave, thank you. The Deputy Director of the FBI is said to have quit early ahead of his formal retirement in March. Andrew McCabe has been a target of criticism from President Trump, who claims he was biased towards Hillary Clinton in the 2016 election. McCabe joined the Bureau in 1996 and worked in the Counterterrorism Division and the Washington Field Office. He was acting director from James Comey when he was fired in May. Washington is calling for a breakthrough on the touchiest NAFTA proposals by the end of February, the fragility of any optimism fueled by fresh ideas from Canada and Mexico. The sixth round of talks in Montreal were framed as pivotal, with the U.S. ramping up the pressure on its partners. Robert Lighthizer says progress has been modest, but the U.S. wants more in the coming weeks. JP Morgan has named Daniel Pinto and Gordon Smith as co-presidents, positioning them as the frontrunners to succeed CEO Jamie Dimon. They will immediately take the president role from Dimon, who plans to stay in the top job at the largest U.S. lender for about 5 more years. Last week at Davos, Dimon told Bloomberg that he and the board believe that some of his direct reports could already run the company. And a new fight is brewing in the Brexit negotiations, with the UK pushing back against an October deadline for a deal. Brexit Secretary David Davis says nothing will be signed into the UK until the UK has clarity on future trade relations with the bloc. A battle is also shaping up over the terms of the 2-year transition. Brussels insists the UK must continue to abide by EU rules, including the European Court of Justice.
During transition, the UK will continue to take part in the single market, to take part to the customs union, and all union policies.
Oh, wow.
Continue to have all the economic benefits. Therefore, it must also apply all the EU rules. The single market cannot be à la carte.
Global news 24 hours a day, powered by more than 27 journalists and analysts in more than 120 countries. I'm Yvonne Van. This is Bloomberg. Dave.
Ron, thank you so much. Right, the other big story following this hour, and of course over the course of this week, is the budget over in India. It, of course, delivers a lot of those details come Thursday, and an advisor to Prime Minister Narendra Modi says the government may stick to the deficit roadmap. However, we're getting some conflicting reports here. Some comments contradicting a report advising the government not to do so, so not to set overly ambitious and deficit targets. Joining us live to talk about all of this and to help simplify this for us, out of Mumbai, Axis Bank Chief Economist Sugata Bhattacharya. Sugata, pleasure to have you joining us this morning to talk about what I would call just an overwhelming mental exercise to understand the Indian budget. So just to simplify this for our viewers and make it fairly straightforward, let me start with this question. I'm going to get up a chart. It essentially shows the budget deficit as a percentage of GDP. Do you think they will stick to that target of 3.2%? And do you think that's realistic for them to do so?
Difficult question. Again, they really need to be a clairvoyant to answer that. Till yesterday, till the economic survey came in, I was relatively sanguine that the government, given what the finance minister had said, the prime minister had said, that they would actually stick to the 3.2% fiscal deficit that was budgeted.
But what I'd like to call the pause clause in yesterday's economic survey, that I mean a pause cannot be a pause in the fiscal consolidation glide path. Boy, that's a mouthful. That can't be ruled out. That sort of shook me and of course the markets. Bond prices dropped. I mean bonds were sold. So markets actually are now beginning to believe that there is a chance that the fiscal deficit will be breached. Hopefully, at this point in time, they do not breach it to any significant degree. I mean, from 3.2 maybe to 3.5, but I don't think they should do anything beyond the 3.5. Remember that the benefits of higher government spending, at least upfront spending, are still not very clear, and the effects on the markets are very immediate and very, very sharp.
Assuming they do stick to it, though, or maybe a little bit above it, as you mentioned here, maybe 3.3, 3.5%, maybe that may be a little bit too high. What does that then do to the outlook for government borrowing? What's the hole that they have to plug? And I'm guessing once that's done, what spending plans then get shelved? Because I imagine there's not enough revenue going around.
Yes, so remember, I mean, we've got plans for additional borrowing, I mean, that goes on into February for about, say about $500 billion Indian rupees. So given that, I mean, you know, and that's a algebraic correspondence with the fiscal deficit. So if you have a higher borrowing, you have to have a higher fiscal deficit. So initially we had thought that they would take some part of this as cash balances and take that over into the FY19 budget and use some of these cash balances to actually keep FY19 market borrowings down. But now let's see what the plan. Remember, it's not a matter of getting in more money. I mean, even the money that was budgeted for FY18, even that hasn't been spent so far. I mean, particularly capital funds for railways, capital funds for many other heads of expenditure. Even those, the spending rate is quite low. So I think as of this point in time, we do need some government expenditure publicly.
Mami, ¿cómo está? Mami. Oh my gosh, Mommy. Mommy. You know what? Oh, $1 menu. McDonald's dollar menu. Dollar menu. Dude, McDonald's is dollar menu, man. It's so cheap. It's so good. I've done that, but like the deals are like actually very, very lame. Like the deals are pretty lame. It's just like it's okay. I'll tell you. $1 Big Mac, you're gonna be shitting me. $1 Big Mac, are you kidding me? Okay. But you have to order through the app, right? Which is a pain in the butt. Okay, so this is the deal. Buy one signature crafted sandwich, get one free. Is it a good deal or not? How much is a signature crafted sandwich? But, so, how can you say that it is a good deal? Okay. What about a free hash browns with any breakfast sandwich purchase? That's true. Any sandwich for $1. Wait, so is Big Mac a sandwich? Holy shit! I didn't know. So, any sandwich. What is the most... Wait, that's ridiculous. So any sandwich, like what is the most expensive sandwich at McDonald's? Is double quarter pounder better or is Big Mac better? Gotcha. What about a $3 large McCafe beverage? What about what about $1 off 10-piece chicken McNuggets? What about buy one medium McCafe beverage to get one free? Yeah, that's true. $1 off any all-day breakfast sandwich. Is it not good? $1 any size coffee. That's true. $3 off any purchase of $10 or more. So the best coupon is like one. So $1 for any sandwich, that's like the best deal, right? And like buy. Yeah. That's true. That's true. Gotcha. So, that's such a good deal. Wait. Okay. So how did you survive before McDonald's came up with $1 menu? How did you survive? wait, oh, that's so fucking broke. That's so sad. Wait, so where did you go instead when McDonald's was a ripoff? Where did you go instead? But what did you get from like Monday to Friday show? So now McDonald's have like $1 menu. Are you like super happy about it? Yes. So McDonald's. So McDonald's. That's so funny. So when did McDonald's revive the $1 menu? Like since when did the $1 menu start to happen? So were you like so excited? That's so true. So how long? So when did they stop supplying $1 menu? So is there a way you stop going to McDonald's? That's so funny, man. That's so funny. Wait, that's so funny. Wait. So where did you go instead of McDonald's during the hard times? So how do you feel like do you just find like hungry, man? So do you go to any restaurants besides McDonald's when McDonald's close up the $1 menu? Wait. What about you now, though? Wait, where'd you go? Wow. That is so cool. Wait, so like, don't you have like a very nice unlimited dining plan? Don't you have an unlimited dining plan? That's a lot of food, man. That's a lot of food. What the? Oh. So you got like a water cup and you fill the cup. Gotcha. Ha! Wait, there's no way. The cup is away from you. The cup is behind the counter. The cup is behind the counter. It's not easily accessible. Huh. Interesting. Wait, so what do you suggest besides like the dollar menus and the deals? Do you know any other good ways to save on McDonald's? So, that's true. Do you know any other food places besides McDonald's that are cheap and delicious? What about Wendy's? But Burger King is super expensive. Gotcha. But do you know, once I took a road trip to Tehachapi, California, and I ordered a burger for $9, a burger for close to $10, okay? At Burger King. How? So how can they charge a burger for $10? How is it possible? How is it fair? Whoa, let's keep conversation going. Wait, it's almost $11. It's almost 11 p.m. How can the dining hall still be open? Okay, holy, I go back. How you are? I need some soda. I want some soda. Stop playing. How's my Bloomberg next time?
Don't snooze on mattress savings at Ashley Home. Learning about investing is a lot like learning to ride a bike. At first, it may look intimidating or complicated. Dangers seem to be everywhere. That's why it's important to learn the basics and ways you can help minimize risk and protect yourself. After a good amount of practice and learning, you can take the training wheels off and really start riding. Along the way, the roads may change. There'll be good days and bad days. And while learning to ride doesn't guarantee you a spot in the Tour de France, riding a bike could get you where you want to go a little faster. Let's start with the basics and look at one of the most common investments, stocks. A stock represents partial ownership of a company. When you purchase a stock, you're buying a piece or a share of a company. By owning a share, you own a small fraction of the company's assets and have a claim on its future earnings. There are two ways you can make money by investing in stock. The first is through stock appreciation, when a stock you own goes up in value. If an investor bought the stock at one price and the price went up, the investor could then make money by selling the stock to another investor at the higher price. The second way is through a dividend. This is a periodic payment issued by some stocks. A dividend is a way for a company to give a portion of its earnings to shareholders. Here's an example of how stocks work. Suppose there's a company called Bull Flag Cycling. This company makes bikes, really good bikes. The bikes are so good, in fact, the company wants to expand, so it can sell more bikes to people all around the world. To do this, the company needs to raise money, also known as capital. There are a few ways this company could do this. It could take out a loan, but that would mean taking on a significant amount of debt. Or it could issue shares of stock. By issuing stock, which is called going public, the company can raise money without going into debt. Instead, it sells shares of ownership and a claim on future earnings to investors. So let's meet a typical investor. Our investor is someone who has a little extra cash. He's looking for an investment that has the potential to offer better returns than a savings account, and he is willing to accept the higher risks of investing in a stock. He thinks Bull Flag Cycling is a promising company that's likely to grow. Because of this, he thinks buying a share would be a good investment. So how much does a share cost? Suppose the company decides to raise $1 million, and it decides to issue 1,000